So I have a hot debate item for you to talk about. Should you be putting a bigger down payment for the purchase of a house or a smaller down payment for the purchase of a house? That's the question we're going to try to answer in today's video. But before I get started, just want to let you know you should like and you should follow my content. If you have any other ideas for videos you'd like to see me do, let me know in the comments below. Now, let's get into the video. Here in Orange County, California, real estate is very, very expensive. It has gotten up to $1.1 million for the median home price, which is an astronomical number. And if you're a first-time home buyer, that's going to be really hard to pull off getting into a house. But there are pros and cons to using smaller down payments versus the bigger down payment. So let's talk about the differences. Let's start with the bigger down payment. Number one, 20% is considered the sweet spot for most lenders. And because of that, you can get lower interest rates, a lower monthly payment, and you're not paying private mortgage insurance or PMI, which is fantastic. If we were to take the median home price of Santa Ana, California, which is the city I live in, the average home prices, or median home price, is about $730,000. So at 20% down, that means $146,000 that you have to come out of pocket to pay. But in return for that, you get lower interest rate, lower monthly payment, and there's no PMI. Now, the trade-off, here's what I think could be potentially the negative, particularly if you're a first-time home buyer, is $146,000 is a lot of money. And for many, that may be all of the money they have. So you are moving into the house poor. This is a term I use a lot with my clients, and I'm always warning against it because it means if you had to use all of your money to get in the house, you have no extra reserves for emergencies personally or for the house. You don't have the money to fix it up. You don't have the money to do repairs. So that could be very inconvenient. So you're kind of hoping nothing goes wrong after you get in that house, and it's hopefully turnkey, meaning it's perfect and there's little to be done. Okay. Now, on the other side of this, you have the smaller down payment, which also has its pros and cons. Some of the good parts of this is you can go buy a house much sooner because at 3.5% as an example, which is FHA, you can take that $730,000 house and purchase it for roughly around $25K, more or less, which is still, it's not a small amount, but it's much more manageable if you save and you're disciplined and you got a game plan in your head. Also with that, this also gives you some more flexibility financially. You will have some additional money for repairs and emergencies, or if there's little cosmetic things you want to do in the house, you can actually fix it up, which is fantastic. This is also a great option for anyone that wants to get into buying a house that is either investment minded or an actual full-time investor. You can do something called house hacking, where you get into it for a low down payment, do something like the FHA 203K, which allows you to also use the bank's money to fix up the place, force appreciation, live in it for about a year, rent out rooms or rent out units, and then move out in a year's time as the guidelines allow, and rinse and repeat. So it gives you a lot more agility because you're not spending so much money and you are using more of the bank's money than your own. Now, the downside to this. Typically, when you're doing lower down payments, it's typically for first-time home buyers that may not have great income or great credit. So your monthly payment is going to be much larger because you're only doing 3.5%. Your interest rates are probably going to be higher unless you have really great credit. And on top of that, you do have that PMI because you were below 20%, which is the sweet spot. So depending on your credit and other factors, that could be hundreds of additional dollars that are added onto the monthly payment. So either way, it's neither good nor bad to be a big down payment or small down payment. You have to decide what works for you in your financial situation and your goals. At the end of the day, my suggestion is just get into a house, start building wealth, and then work on the rest from